Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy dividend royalty stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that are dividend royalty, and by that I mean they're both dividend aristocrats and dividend kings. Now you might think that both of those just have to do with how long they've been paying and increasing their dividend, which is true, but there are some other factors as well. Dividend aristocrats do have some other criteria to meet, including things like their market cap and whether they're included in the S&P 500. On top of that, they have 25 years of annual increases and dividend payments. Dividend kings, on the other hand, only have one piece of criteria, and that is 50 consecutive years of dividend payments and increases. So today we're taking a look at two stocks that meet both of these criteria, plus also come in with a strong buy consensus from Wall Street. We're going to take a look at these companies, what it is that they do, that dividend info, and of course what Wall Street analysts are predicting for the stock's future. You can follow along with these stocks over on the TipRanks website or by downloading the TipRanks mobile app using the links in the description down below. And just before we get into today's companies, if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into our two strong buy dividend royalty stocks. First up, we're taking a look at Federal Realty. They trade under the ticker FRT, currently priced at $114.51. Over the past year, they have gained 30%, year to date up over 14%, and in the last 3 months up 3.5%. Federal Realty is a REIT or real estate investment trust and is actually the only REIT that can call itself a dividend king. Established back in 1962, they are one of the oldest real estate investment trusts focused on the ownership, operation, and development of high-quality retail properties, including shopping centers and urban mixed-use properties. They have over 27 million square feet of properties with over 3,400 tenants and 3,100 residential units. Some of their top tenants include big retail names like TJX, Cisco, CVS, Gap, Ross, and Home Depot. As the REIT with the longest record, they boast 57 years of consecutive dividend payments and increases. And over those 57 years, they have a compound annual growth rate for that dividend of 7%. And that current quarterly dividend comes in at $1.10 per share for a dividend yield of 3.82%. Their next ex-dividend date is January 2nd for a payment of January 15th. They just shared their third quarter earnings report a couple of weeks ago on October 30th. They had a very slight earnings miss, record FFO, and a revenue beat. For their Q3, they reported earnings per share of 70 cents, which fell 1 cent short of expectations, while they did see funds from operations come in at $1.71. Revenue came in at $303.63 million, beating by over $2 million and growing nearly 6% year over year. Also in the quarter, the company signed 126 leases for rollover growth of 14%. Looking forward, they did tighten and raise some 2024 guidance, saying that they were confident that they're well positioned for continued success. And at the end of the quarter, their portfolio was 94% occupied, which was an increase of 90 basis points quarter over quarter. Following that Q3 report, we did hear from a 5-star analyst at Truist Financial who reiterated their buy rating. He said that their results showed a consistent increase in leased occupancy, which is a positive indicator for future growth, and that their financial metrics remain solid with a slight increase in full-year FFO guidance and a stable SSNOI growth projection. Despite a minor shortfall in the expected FFO per share, other financial elements such as a lower than expected general and admin expense contributed positively, and these factors combined suggest that Federal Realty is well positioned compared to its peers. Overall, Federal Realty has 11 current analyst ratings, coming in as a strong buy based on 9 buy ratings and 2 holds. And the average price target comes in at $124, implying an upside potential of 9% from current prices. Looking at those recent ratings down below, on the low end we do have a recent hold here with a slight upside of 1%, while our high-end price target is $135 from Piper Sandler for an upside of nearly 18%. And our second dividend royalty stock is Decton Dickinson. They trade under the ticker BDX, currently priced at $232.50. They've largely traded sideways this past year, are up 0.2% and slightly in the red year to date, down 3.5%, while in the last 3 months, once again fairly sideways here, down 1.2%. Decton Dickinson is a global leader in the medical technology and supply industry. They develop, manufacture, and sell medical supplies, devices, lab equipment, and diagnostic products used by healthcare institutions, physicians, clinical labs, and the pharmaceutical industry. They operate through 3 divisions with their medical division, life sciences, and intervention segment. And the company is the largest manufacturer of pre-filled syringes globally and is expanding. Founded back in 1897, they now operate across 190 countries and last year had revenue of over $19.3 billion. Decton Dickinson has been increasing their dividend for 53 consecutive years. Over the last 10 years, that compound annual growth rate comes in at nearly 6%, but their most recently declared dividend saw an increase of over 9%. That quarterly dividend now comes in at $1.04 per share for a yield of 1.64% and a very healthy payout ratio at just 28%. Their next ex-dividend date is December 9th for a payment on December 31st. Their latest quarterly report was shared on November 7th, where they had both an earnings and revenue beat and raised their full-year guidance. For their fourth quarter, they reported earnings per share of $3.81, beating analyst expectations by 4 cents per share, and revenue came in at $5.4 billion, which did also beat expectations and increased nearly 7%. Looking at the entire year, revenue came in at $20.2 billion, which did increase by 4.2%. Management commented that during the year, their team advanced their strategy, continuing to shift their portfolio into higher growth areas through new innovations and the acquisition of Edwards Life Sciences Critical Care Product Group, while leveraging their BD Excellence system to exceed their margin expansion, earnings, and cash flow goals. At the start of October, we did see a 5-star analyst from Citi upgrade their rating on the stock from a hold to a buy. They said that Decton shares have been range-bound for years, compressing forward valuation multiples. Yet with the initial fiscal 2025 commentary in hand and the closure of the critical care assets from Edwards providing upward bias to estimates, they wonder if this is not the time to become more constructive on BDX. They believe the initial soft guidance is attainable and gives management breathing room to beat and raise. The BDX stock also has 11 current analyst ratings, coming in as a strong buy with 9 buys and 2 holds. And their average price target comes in at $277, implying an upside potential of about 19% from current prices. Looking at those ratings down below, on the low end we have a hold from JP Morgan, still with an upside of 7.5%, the rest all in the double digits, with our high-end price target coming from Evercore at $290 for an upside of nearly 25%. So that is a quick look at 2 strong buy stocks, both meeting the criteria for Dividend, Aristocrat, and King. Let me know your thoughts on these 2 companies in the comments down below. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan and do your own research and due diligence. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.